How we doing, everybody? Chase here. So today I want to cover a few topics. So forgive me if I'm at all, if I ever veer off topic or anything of that nature. I do apologize ahead of time. We're going to cover a few things here. So basically what I want to do is I want to help teach you guys how to build a nice clean chart with some indicators that can help you support your decisions and try to spot some successful trade opportunities. Okay, so I'm not going to cover how to plot supports and resistances. Horizontal supports and resistances, I'm sure you can find a lot of information on them everywhere. Quick rundown of how I do it is just I start at the 3-day, I go down to the 1-day, I go down to the 12-hour, I go down to the 4-hour. I refine my lines as I go. Look for things like double tops, look for a lot of confluence, double bottoms, things of that nature. Find zones where you're finding lots of levels of support. See like this area with a lot of volume. We're getting resistance here, we're getting support here, we're getting resistance here. We're getting support here. So things like that. You want to find areas of interest, and you can see we have this double bottom here. That's when we also hit 58.55 over here, the recent bottom in February. So horizontal supports and resistances. That's really basic stuff. And let's move forward onto some other things. We can get some indicators up on the screen. I'll tell you, what I utilize them for and the type of things I'm looking for. Okay, so first thing we could pull up, and I'll cover these one at a time, and then we'll go through sort of a checklist at the end for potential trade opportunity. So first thing we could do is pull up the Stoch RSI. It's a nice simple indicator. What I personally look for on it is irregularity. So I like to see when the Stoch has been peaked for a long time, or it's been bottomed for a long time. I see a lot of people, they like to say, oh, the Stoch is peaked, we're coming down. It's not always the case, guys. Sometimes we go up and we're up for a long time. Okay, so let's not just look at it just for a simple peak or a bottom. We want to look at it and try to find some time where it was peaked or it's bottomed for an irregular amount of time. And we're never going to make a decision off of one indicator anyway. The whole point of having multiple indicators and things like horizontal supports and resistances, using the Stoch, using the normal RSI, using the Ichimoku cloud, using the volume profile, some things we'll cover today, is trying to find a confluence and basically a when the stars align moment to spot really good trades. Okay, so like I said, for the Stoch RSI, I'm looking for a long peak or long bottoms, things of that nature. Once you get towards the end of that, and you can look for something like a bullish Stoch cross, like here you could see. Here you could see the blue above the orange here, a bullish cross, and here you see the blue go below the orange, a bearish cross. Towards the end of this irregular amount of time where you're either peaked or bottomed. So Stoch RSI, we want to look for irregularities. Let's move on to the next indicator we'll cover. And that will be just the normal RSI. So what do we want to look for on the normal RSI? First off, we want to make it a little bit bigger because we want to use it to try to spot divergences. You can also use it just to see overbought or oversold. That's perfectly fine. But, in this case, I like to use it to spot divergences. Let's take a look at something that happened today, the most recent opportunity. And I'm sort of upset because I slept through this. I got up about an hour late, and I was about, I'll show you exactly what happened. I woke up. I had this little trend line drawn here for possibly a rising wedge, something like this. I forget exactly what it was, but okay. So pretend we have rising wedge here, and I woke up and I saw that we had this bearish divergence here. We had the RSI making lower highs, and we had the price action. We want to aim at the body close of the candle. So the price action was making a higher high. Okay, and basically what this is showing is that the bulls were running out of strength. Okay, so I saw this when I woke up, and the price was right around here. So what I said was, I really don't have an optimal entry here. I don't feel like I want to short here. What if we get a bounce? We have, not really going to call this a level of confluence, but we have some bounces here. And if you did want to really think this was a good rising wedge, then you would expect that you would get some type of a bounce off of the trend line here, which we did. You can see this 15-minute candle bounces and gives a small bounce. So a bit stubborn of me, but also sort of just a part of my personal trading strategy that I don't accept subpar entries, and I didn't even really know where I'd put my stop loss anyway, because this 7150 area I had drawn here, which was 7134 the other day, but I recently moved it. It was just an area of interest of mine, and sort of a micro support or resistance, so to say. So I have all my supports in green, I have all my resistances in red, I have my little area of interest, micro support and resistance in purple that I start drawing when we get confined to a certain area, and I have this bold blue trend line, which comes from way earlier. Experimental trend line, we'll see how it plays out. On Bitfinex, it actually works much better than on BitMEX. Okay, so now we talked about what we can utilize the Stach RSI for, and let's start looking for some confluence. So now we can say that we have the rising wedge, so that's one level of bearish confluence, because we know rising wedges are bearish. We have this area of interest resistance line here, or we just have a normal resistance line at 72.18. I think anyone who has well-defined levels on their chart should have a resistance area around 72 or 73. So we were coming up to a resistance right here. So now we have two levels of bearish confluence. We have the rising wedge, and we have the resistance here of the 72.18 or the 71.50. Okay, now we can look down at the RSI, and we see bearish divergence. Now we have three levels of confluence. Let's take a look and see on the Stach RSI if there was anything bearish. Well, we did have a peaked Stach RSI on the 15, but it was not peaked for any amount of time that I would have considered even giving it much thought. It's a little bit of confluence, but I don't really care. So let's look at some other time frames. On the 30, we weren't getting much. On the 1 hour, we were peaked, but not for any substantial amount of time. On the 2 hour, nothing substantial. On the 4 hour, okay. So on the 4 hour, we can see we were peaked for an irregular amount of time. So this is the type of thing I'm talking about with the Stach RSI. This is what I like to see. So now we would have four levels of confluence for this move. We would have the rising wedge, the horizontal resistance, the bearish divergence on the RSI, and this irregularly amount of time peaked Stach RSI, and still was waiting to come down. Okay, so now four levels of confluence. That is what you can say is a pretty spot-on trade right there when you have four levels of confluence. And if you can find more, then even better. So now let's bring in some other indicators and see if we can get any other reads. First thing we can do is we can bring in the Ichimoku cloud. I'm going to clean this up a bit. Take off the leads, take off the lagging span. How do I get this area so clean up here? I will show you. I'll go to properties. I will go to indicator arguments and values, turn them both off. And now that cleans that up a lot. Okay. Also, I take my volume here. I go style, volume, MA, and I just turn it to invisible. Okay, if you don't want that orange line coming down your screen here. Okay, so that's what I do. In terms of the Ichimoku cloud, I'm not going to dig into the settings idea of it. It's a rat hole or whatever you want to call it. I'm not interested in arguing with people or anything of that nature. My personal opinion is I like to use the stock settings because I believe I like to use it mostly for the TK cross, not the cloud, and I believe that the TK cross is more responsive on the standard Ichimoku cloud settings. I will show you a quick example. I have not previously looked at this or anything. I'm just going to pull it up and we'll go with the flow and see how it works. Looks like we are getting a little bit of lag here. Okay, so let's pull up the second Ichimoku cloud. Let's type in our crypto settings, which sometimes I do cross-reference with the crypto settings as well. So I'm not completely bashing them. I'm just saying I believe for the TK cross, I prefer to have the more responsive default settings. Okay, so here on the 4-hour time frame, we are looking at, let's see where a big move was. Okay, we had a big move here. So here we get a TK cross right around 15 to 19 on February 7th. We get a nice strong TK cross. Looks like we're headed upwards. We get a little fake reading here, and this will be crypto setting enthusiasts' argument against mine, which is sometimes you get false readings on the more responsive settings, which is true, but I'm a believer that, my counter argument is basically that you should never be using just one indicator or one, it's like I said, when the stars align, you can never just use one indicator and say, oh yeah, well, I'm going long because we got a TK cross. No, that shouldn't be how it works. You want to find a lot of bullish or bearish confluence to your argument. So, like I said, we could see here that we get our first cross here at the 7,600 level. Now on the crypto settings, we get our first cross at the 8,100 level. So you got a TK cross here, but you got it $500 later. Okay, now let's take a look at this big drop up here. So on this big drop, we got our TK cross at 11,120. On the crypto settings, we didn't get our cross until 10,500. Or even if you really wanted to say when did it really cross, it really didn't cross until 10,000. So here you lost about 1,300 points if you were following just the TK cross. Okay, so that is why I personally utilize the standard default Ichimoku TK cross settings because I believe they're more responsive, and it is what I prefer to use. Okay. Now we can bring up another thing here. We could bring up the VPVR. I am not going to go into an in-depth explanation of the VPR. If you are looking for that, good tutorial online is Joe Zabs' Twitter, Crypto Cartel. Check him out. He has a good tutorial that goes over the VPVR. Okay. So what do I personally use the VPVR for? I'm going to utilize it for confluence, for supports and resistance levels. So when I see that you're having a lot of high volume nodes, they typically should align with where you're plotting your supports and resistances. Okay. Down here, I don't believe the VPVR was providing us with too much confluence. Not really. The final point of resistance here is the final sort of high volume node. So I don't believe the VPVR here would have given us much confluence in terms of the situation, as far as I'm seeing. Yeah. And just so you know that the VPVR does change with the more data you provide it. So the more space you're showing on the chart, the more data you're providing it, the volume profile reacts in that manner. Okay. So, yep, not too much confluence here, at least for my taste. So, where to go from here? Now we can simply say this. We can say we have confluence of the rise, and sort of do this like a checklist. When you're looking for a potential trade opportunity, I want you to go down the checklist. I want you to say, okay, do I have a Am I up against a strong horizontal support or resistance? Okay, am I seeing any type of RSI divergence on any time frames? And look over a few time frames and see which time frames are giving you some type of divergence. Then you can take a look at your Stotch RSIs. Check out the time frames on those. See if you have had a regular amount of peak time on any of the time frames. And when you're looking at something like a longer time frame, like a 4 hour, if the 4 hour is going to start to come down, it's always good to take some safe profit. If I was playing this, little veer off the play here, what I was talking about, but I'll tell you exactly how I would have played this. If I would have seen the bearish divergence when I was awake, because I was actually in a long position from the breakout around here. We came up, I let it do some, I let the market maker run some stops and whatnot, and then around here I jumped in. And then I closed 75% of my long by 71.50 while I was sleeping, because this was basically my point of interest. And I actually closed that long around 71.48. Give yourself a little room before even numbers, because everyone's putting their order on even numbers. Just something that I believe. It's a personal belief. Maybe I'm wrong. Okay, so if I would have spotted this, I would have shorted around here, and I would have set my stop loss above the next resistance. I would have taken 50% profit at the side of the wedge here. If you know me, you know I like to take safe profits. It's just how I operate. I like to try to build my account every single day. So I would have taken 50% profit here, and then I would have let the other 50% ride, probably, taken like 25% here, 25% here, something of that nature. If I actually saw how strong this dump was, and I actually had a trade open, I might have let it ride a little more, maybe done, 15%, and, save some more for down here and see how it would have went. Okay, so what was I talking about before I covered this play? I was on the higher time frame. Oh yeah, talking about the Stotch RSI. When the Stotch RSI is peaked for a long amount of time on the higher time frame, give it some time to come down. You don't need to take your profits immediately. Like I said, personally, I like to take some safe profits, but in this situation, I definitely would have identified that, okay, this 4 hour Stotch is going to come down. We're going to get a fairly significant dump. It's going to be more than 50 points. It's going to be more than 100 points. Okay? So once you have everything on your chart set up and you have some of these indicators that can give you, basically some confluence for your bullish or bearish ideas and to spot possible trade opportunities, you can go up to templates here. You can save the template. I'm going to save it as Chase NL2. And then what you can do is anytime you start a new chart, you can simply go up to your templates. You can bring up your template, and now you have all your settings the way you had set them up previously. You could use it on any new chart, because for me personally, I like to have a high time frame chart and a low time frame chart, and I like to have like a chart that I don't draw on at all, that keeps, lets my mind stay clear, and see the bigger picture. Okay, so hopefully that is a good outline on some indicators to look at, just some basics. Doing a basic checklist to spot some potentially successful trades, and I hope that helps. So if this video helped you, I will leave my BitMEX referral link here in the YouTube comments. Also, I will leave a link to my Twitter. If you're interested in learning more like this on a daily basis, or I try to spot potential trades like this and I relay them to the group, then you can send me a DM on Twitter, and I'll get back to you as soon as possible. So thank you very much, everybody. Have a great day, and happy trading. Okay, see you guys later.